Anyway, real estate investment trusts have been pretty much market darlings, and the Fed says U.S. interest rates will stay near record lows until 2015. Does that open up REITs to continue their run of success? Joining us to talk about this is Frank Mayer, Chairman and Co-Portfolio Manager at Vision Capital. Frank, good to see you. Thanks for coming in. What does that do to the outlook for REITs when you have basically a guarantee of low interest rates for the foreseeable future?
It underpins the future in a very positive way. One real estate executive I met with yesterday said the environment is incredible because not only are interest rates likely to remain low for a prolonged period of time, real estate market conditions are very favorable as well. Mortgage rates are low, property values are rising, there's a large number of acquisitions available, development opportunities are increasing. It's a very favorable environment all around. And if you compare Canadian REITs to American REITs, Canadian REITs are cheaper as measured by AFFO, a measure of free cash flow, and as measured by a premium to net asset value. The premium in the United States is much larger, even though American real estate markets are not as favorable as Canadian markets.
American rates are expected to stay low until infinity, it seems, but Canadian rates aren't necessarily expected to stay low as long. A lot of people are talking about the Bank of Canada ticking rates up in 2013. Are they priced for that at all in terms of that uptick in rates in Canada?
Well, as one of the accompanying slides I have shows, the spread between cap rates and long-term Canada is now unusually wide. So there is a buffer.
Yeah, tell us a little bit. There's the chart right there.
There is a buffer in the event that interest rates were to go up. However, I would argue that the Governor of the Bank of Canada will have no choice but to follow the American government, because otherwise the exchange rate will continue to rise and hollow out the central Canadian economy. If you look at the latest employment numbers for August, you'll notice that Canada was up 1%, Ontario and Quebec were up around 0.5%, but the Western Canada were up over 2 or 3%, depending on which province you look at.
How do the U.S. REITs compare with the Canadian REITs? If you're looking to bolster your own portfolio, where are you going to find better value right now?
We believe that there's no question that there's better value in Canada for a number of reasons. One, as I mentioned a moment ago, the FFO multiples or multiples of cash flow are lower. The premium to net asset values in Canada are lower. The real estate market conditions are better in Canada, and therefore there's less risk. And when you go into the United States, of course, you incur foreign exchange risk. And we've seen that in the last few weeks. We've seen it in the last few years. So why not stay at home?
What sectors in Canada look most attractive to you?
There's no facile answer to that, because we examine in our business at Vision, we look at real estate markets across the country by sector, and then we try to ascertain which are the best markets. But then you have to marry that with the valuation of the shares. Mm-hmm. And so what emerges is a potpourri. And we try to focus on those stocks that are most undervalued and will therefore have the greatest potential in what we believe is not an efficient market, an inefficient market.
What are sort of some of the names that are really jumping out on your screens right now when you run that sort of metric?
As a general statement, I would say to you the following, and we're constrained because we're not allowed to refer to companies in which we're insiders, nor those in which we're accumulating shares. But as a general rule, I would say to you, in the low interest rate environment, investors are migrating to anything with a yield. And therefore, you have real estate companies, typically, some of them, do not pay a significant dividend, if any dividend at all. And those guys are being ignored by many, and therefore are undervalued relative to the others. That's the one segment that stands out.
So you should be looking at and doing your homework, for our viewers out there, on those that aren't paying a distribution?
Well, those would appear to us to be cheaper.
Mm-hmm. But rightly so. I mean, the reason they aren't paying a distribution is it because they don't have the money to do so?
No, in many cases they choose not to pay the distribution because they feel they have opportunities to reinvest the money at excellent rates of return, and or they buy back their own shares which are inefficiently priced, which are undervalued, and therefore have attraction to them.
Frank, great to have you in. Thanks for joining us.
Thank you.
We're joined by Frank Mayer. He is chairman and co-portfolio manager at Vision Capital.